Okay, guys, I'm about to go to market on Aussie JPY. I'm about to put the order in as we speak, and then I'll explain what it is, what I'm doing. So I need to drop that down slightly to 10 pip target. Okay, so 1, 2, 3, 4, 5. Yeah, just edge that up. Right, okay. So it's not a bad trade. I've done the news update this morning and right, it's gone to market. This is the market of choice from when I was doing the strengths this morning. And I sort of shoot that video out for the squad straight away and you guys see it mid-morning. But I also, what I do is I do what's called trade tracker. Now there's the news video that was done. And this went in early morning. As you can see, Aussie JPY is the strongest and the weakest. Now, when I looked at the trade tracker, now if one of the guys, sort of like the plus guys, etc., do this, I'll track it just for them and above sort of thing. And little haircut there, ask for Aussie JPY anyway. So that's what we do. So I've broke it down, told them exactly what the trade is going to be, which is in this video here. So they can trade along with it if they choose. It's not a signal service, it's a hand-holding service where I'll break the chart for them, tell them exactly what it is I would do with it, and then, well, here we are now trading it. So when you see things retrospectively, it's a little bit harder to tell the guys what I'm doing first and then come to market and do it. It's kind of putting my head on the block and makes me accountable for what I do. So, what's the trade itself? Well, first of all, we need to come this far out, and I'll kind of explain something to you. So, I'll pull that bigger version of my strength in so you can see it, which is across here. So, what it's essentially telling me to do is this particular makeup matrix here. The guys have access to, so they can do it themselves as well, is it's telling me the trade is predominantly to be a sell. It's actually a B trade, this actually, but not that it matters. But it's predominantly selling, and it's telling me it's a pretty good trade to take a look at. Okay, now as we go through the day, all I'm doing is I'm looking. Once I've established that, it's a bit early in the morning. I'm going to just change that to a B actually, because that's what it should have been. It might address the target slightly. Yeah, it has. It's dropped a couple of pips off the target, but I'm not really worried. I'm going to leave it at 10 anyway. It's a bit early in the morning, you know. It's your fault. What? Well, you woke us up. But you didn't invigorate me. You just told me to get out of bed and make some money. It's no good, you know. It's no good at all. This early morning lark. Right. So we know it's selling, but why is it selling? Well, you can see that here. As it's pulsed up, this bit here is showing signs that the pulse up may be running out of steam. Big long tails pushing down, showing there's a lot of pressure for the sellers involved. Now, you've also got this strong drive here. Now, if I drop on an extension onto that, which is from there to there, what you can see is, well, the high time frame fibs is aligning perfectly with that. So it's burst through this point and it's attempted to go up there and it's failed at this point. So therefore, it'll come back into its range. Well, if it's back into its range, it's then going to look to see what the key fibs of that were. Well, if I put a retracement on, so if I'm going the opposite way, it shows that this level down here where it clustered prior is possibly a target. Okay. But we're doing it in the face of an upward move. It is in a bull market, even though it's selling, right? So what do? You kind of think, well, if that's where it's going, that's going to be a bounce point. I want to be at the top of the range. Well, there's the cluster of the range. So you just target a run across the top because it'll test that first before it tests this. That's the theory. Take it down into an hour. Now you can see it that little bit clearer. Now we're getting into this cluster point. So again, that target is running across the top of here, which is fine. But we've also got this strong directional drive here to come up. And the market is now contained between that high and that low. So I'll put the retracement on again. Just up here. And then what have we got? Well, marries up again. So I'll just build this up in front of you. There's your entry point, or an entry point you could use. And its exit point, 61, which happens to be the target. So what we're looking for is the push through here to bounce on there. And then take it down to 15 minute. And again, you can start seeing it. High, lower high, come down. And where's the target? Well, it's revisiting where it's been before. So everything ties up. Now, all I have to do now is enter the market to get to here. And because I can see where the top section is, if I'm wrong, I can also stage all the way up to there. And if it breaks through there, it's running at that. And if it breaks through that, I'm wrong. So what I've got now is areas of attraction where I can see how the market's going to operate and also where I can stage into it. So that's what I'm doing. Catch you in a bit. Okay guys, so that's that job done as per what I said earlier on this morning. It was a very simple trade. In fact, it was a very easy trade in the sense that I had my parameters set out. I knew exactly where I was going to get out if it was wrong, and it had a staged profit target in order to build up. So let me just make certain. So we've got nothing running, got my tickets out, and then there you go. That's what it's produced. I'd like to have done more than 200 quid because that's one of my rules, but at the same time, it's not a million miles off, and I'm quite happy, and that's what you saw me do yesterday on the scalp. So if you've got everything pre-planned and you know where you're going with your trades, trading ain't difficult at all, kids. It really isn't. Now, my process is quite simple. I get my levels into play. My levels are key. Work from one to the next. I'll trap the price between two zones, and then I'll do a multi-time frame analysis to figure out how to get the direction. And then I work it on a 3-click basis. Now, I'm asked all the time about my biases. It's not X marks the spot. You've got to be able to recognize conditions and see how the market operates. And that's what I do. Now, I get people all the time saying, it's too complicated. Well, if you want a 6-figure salary, no one's going to give it to you. Of course it's complicated. But it's not as complicated as you think it is. It's actually common sense. So you got the C part right. You've got the rest of the sentence wrong. If you apply common sense to a market, you're fine. And what I mean by that is, if this is telling you it's going down, until it's going down, or I'll rephrase that, until it tells you it's going up, you sell it. It's that simple. It's a case of just stacking the odds in your favour. But if you're wrong, you need to know where you're going to get out. Well, that's why I figure out, where's the next turning point? Where would it have actually tipped the balance from turning from sell situation into a buy situation? And once you've got that in place, you can stage into it to make certain that you get more profit, and just makes life so much easier. And if the first position runs for you and the others don't get triggered, so what? Difference does it make? Just means that bit of information, that bit of trade worked for you. Trading ain't difficult, guys. Anyway, there you go. So that's me just following on from what I was talking to in the guys. We live tonight, where we go through the charts and kind of see what's going on. And that's it. So as always, have yourselves a great day. Catch you soon.